Hello, this is Benjamin Maddox, and this is my GLO-BUS final presentation. My company was Rhino Cameras. So, trends in annual total revenue for Rhino cameras. As you can see, it was a gradual upwards trend. Now, realistically, I probably would have wanted the slope to trend even higher, but in reality, this is a positive upwards trend. You really can't complain too much about it. Year over year, I was making more money than the previous year. So there was a slight dip in what looks like year 12. It did rebound in year 13 and continue to grow into year 14. Trends in annual earnings per share, EPS. So this is more like what we want to see. Once again, I'm not really sure what happened in year 12. It was another down year, but once again, rebounded in 13, continued to grow in 14. Um, and you can see the gradual upwards trend throughout the entire project. So now we're on trends in return on equity investment. So return on equity, as you can see, kind of leveled out after year 7 all the way until year 12. Why that is, I'm not 100% sure. I should do, if this were to continue, this project, I would see what exactly it was that I changed in year 12 that set me on the upwards trajectory really fast and continue to hopefully improve that same upwards trajectory in the future. Um, but in reality, it is a gradual upwards trending graph. It's just kind of slowed down between year 7 and year 12. Trends in year-end stock price. So, as you can see, this is another gradual upwards trend, which we like. Once again, year 12 was a down year. Um, that seems to be a trend here. But once again, upwards trending trajectory. After that dip in year 12, we continue to grow in year 13 and 14, and there's no doubt it would continue to grow in 15 if this were to continue. So let's move on to the company's annual credit rating. So as you can see, I had an A plus credit rating starting in year 9. Now, this is a good thing, you know. I didn't take out many loans. I paid them off really quick. Maybe I should have taken out more loans, but I didn't. And it allowed me to maintain a plus credit rating from year 9 through the end of the semester. Trends in annual image rating. So this is our first downward sloping bar graph. Um, I think this is largely to do with the fact that I had to make difficult decisions in order to compete with the other companies. So I did raise prices. I did do a variety of different things that I guess affected my image rating. Um, so that is absolutely something I can improve on if this project were to continue. It never dipped below a 70, so that's good, but it also never went higher than it did in year 7 when it was what looks like an 82. So that is definitely one of my weak points this semester was my image rating. Something I could definitely improve on if this were to continue. So my strategic vision. My strategic vision going into this project was to offer top of the line products at a outstanding price, right? And my logic behind this is I wanted to capture market share quickly in the beginning of the game. So to do that, I, for one, created the highest quality action cameras in the market, industry leading products. So in the AC camera segment, Rhino Cameras was the industry leader in PQ rating and far higher than the industry average for PQ ratings in the UAV drone segment as well. So, although I wasn't the highest in the drone segment, I was definitely one of the top players in PQ ratings for both cameras and drones. Once again, trying to capture the attention of the market. As you can see, I want to build the brand loyalty. That was the entire idea. So, in order to build the brand loyalty that would last even after we started to raise our prices, which we were inevitably going to have to do anyways. Um, and so I wanted to capture the market, and then slowly raise prices after that. Our future performance targets, if we were to continue into year 16 and year 17, would look like this: earnings per share 15, earnings per share in year 17 probably around 15 as well. Return on equity in year 16, I would go for 65%. Year 17, where we're going to push to 70. Stock price in year 16, and these are pretty conservative estimates. Um, I've found to underpromise and overdeliver seems to work out to the benefit of the company. So stock prices, we'll say 440 in year 16, and we're going to push for 480 in year 17. Credit rating, like I said, we've had an A plus credit rating for the majority of this project, so hoping to maintain that. Image rating, this is the one that I've been struggling in, so slowly over time, we want to increase our image rating. So in year 16, we're pushing for 74, as credit rating of 74, and in year 17, we're going to push for 76. Hopefully continue to climb. Hopefully those numbers are even bigger than what I've written, but once again, under promise, over deliver. The AC camera competitive strategy. So we wanted to differentiate based on price and quality. And what I meant by that is we want to offer the best PQ rating in the industry. Did that turn out to be the best decision? I don't know. It worked out pretty well for us. There was a company with a lower PQ rating who did outperform us. So, but I don't know if that's from this strategy or some of the other decisions I made down the line. But it did work out pretty well for us. So we offered the highest PQ rating in the industry, extremely competitive pricing. Once again, capture the attention of the consumers, build the brand loyalty. We also had steady market growth. So it might not have been quite as fast as some of the other competitors, but we did have very steady market share growth. And once again, we steadily increased the price over time, which was always part of our strategy. We couldn't compete if having the highest PQ rating and also one of the lowest prices. So had to change, and the market seemed to understand that. UAV drone competitive strategy. So I was less competitive in the sense of taking risk when it came to the drone market. We didn't stray away from what made us successful. It had steady growth. We had really high quality. We had aggressive pricing as well. We slowly raised the market share over time. We slowly raised our prices the same way we did our action cameras. And that allowed us to maintain steady growth, and we really minimized risks in this category. And once again, seems to have worked out pretty well for us. Production strategy. So here are the AC camera workforce compensation and the UAV drone workforce compensation. As you can see, the drone workforce is higher compensated. For whatever reason, we determined, by we, I mean I, determined that this was the more effective strategy. The drone workforce seemed to demand higher compensation. We also upgraded robotics when possible. We did what is necessary to eliminate any overtime if possible, added workstations to meet expected demand every single year, and adjusted workforce compensations to maximize profits. And this goes back to paying the drone workforce more than the action camera workforce. Finance strategy. So we were by far very aggressive when it comes to dividends. I don't necessarily know if this was the best strategy. We did just fine in terms of the competition, but but we were very aggressive when it comes to dividends, apparently, in terms of what the competitors have done. Our gross profit margin was very strong. It was near the top of all of the teams. Our net profit margins were also very strong. Operating profit margins, same thing, very, very strong. We did get beat by one competitor, which would be Company A, but they also did win the competition. We finished in second. and they were very impressive. So, all in all, I would say we managed our financial strategy pretty efficiently. We also were able to maintain the A plus credit rating and very high profitability ratios across the board. So, strongest slash closest competitors in the action camera market. So, here's Company A again. They were actually the winners of the competition, like I previously said. They were our biggest competitors by far. They were they killed it. They did. They did a really really fantastic job. And Company I also did a really good job. They played in the lower end market. Company A, they were up there with us in the higher end market. Company A played a different, or Company I played a completely different game. So we did have the highest PQ rating, as you can see. I am Company B. So Company A had better brand reputation. So did Company I, which is something I actually struggled with. Um, the thing is, too, Company A had a lower PQ rating, but they still charged a higher price, and they also were able to have stronger demand and capture more market share. So that's absolutely not what we wanted. Kudos to them; they did a great job. So that is something Company B I could have done better at. Company I, like I previously stated, they also captured more market share than us, but they were playing a different game. Their drones were only $300. Their PQ ratings were only 4.7. They were in the lower market, but it allowed them to capture a higher market share than I was able to. Strongest competitors in the drone segment. Once again, we see Company A and Company I. Company A killed it across the board. So they actually did have a higher PQ rating than I did in the drone segment. And they also charged a much higher price. Company I, once again, they play the low game, they play on the low end. They had a PQ rating of 4.6. I fit right in between Company A and Company I, and had lower market share than both of them. Company A, like I said, they're playing in the high end. They had higher number of models. They spent more on their advertising and recruitment and displays, and were able to dominate the market as a result. We were still very competitive. They ran away with the thing though. So, what are some actions to outcompete rivals in the next 2 years? Action camera segments specifically. So, as I previously stated, Camera A sold a lower quality product, but was still able to charge higher prices and capture a larger market share than I was. I believe this was primarily due to their aggressive spending in marketing, which is something Company B would increase significantly in the upcoming years. Company B is obviously me. Um, and I think this is exactly it. They were more aggressive in marketing. They were more aggressive with the number of models they offered, which is something else I would like to increase if this were to continue. I would want to offer at least five. Hopefully, it would make us more competitive with Company A. Um, they we would also like to increase our sales promotions and extend our warranty period. Once again, much like Company A, who turns out did all of these things and had slightly better results than I did. So to compete in the future with our higher PQ ratings, I believe we could overtake them if we just made some of these changes and devoted more resources towards advertising and promotions and warranties and that kind of thing. Actions to outcompete rivals in the next 2 years, the drone segment. So we would make the adjustments necessary. This kind of goes for the action cameras as well, but we want to make the adjustments necessary to increase our brand reputation, which has taken a significant hit in the past couple of years. So as you saw, our only downtrending bar graph was our company reputation. That is not something that I wanted. I definitely want to change that trajectory, and if we were to continue this, I would do whatever is necessary in order to increase our brand reputation. We would also like to increase the number of models offered, much like the